Hey guys, welcome back to another video. So before I start off, I just want to let you know that I'm not a SEBI registered, and this information is provided only for educational purposes. So before investing, I would suggest you to first consult your financial advisor. Okay. So today we're gonna discuss on IOCL. Okay. So this company does not give a very good return on your share price, but it gives a very good dividend. Okay, which is like a type of FD, right? Interest on your investment. So why IOCL? Okay. So introduction. IOCL is Indian Oil Corporation Limited. Okay, it is controlled by the government of India, and not only that, it has an interest, okay, in refining, pipeline transportation, and marketing of petroleum products, and like they're into even research and development, exploration, production, and all those petrochemicals. Okay, so let's read something about IOC, right? Before you invest, we should know something, right? So the first is refining capacity. Okay? If you look at IOC, it has one of the largest refining company in India, and not only that, it has 11 refineries with a total capacity of 81.2 million metric tons per annum. Okay, and it possesses 32% of total refining capacity in India. And you see that there are two refineries that is in Chennai that are on, and it is a subsidiary of Chennai Petroleum Corporation Limited, which the company owns 52% of the stakes. Okay, uh, and looking at the capacity, it has been working with 100% of the capacity for the past 3 years. And even if you look at the pipeline network, okay, it is one of the biggest, okay, pipeline network that is present in India with 14,500 kilometers pipeline spread across India, and it has 95 million metric tons per annum of liquid pipeline capacity. Okay, and you can see that it owns 73% of crude pipelines and 52% of product pipeline that are spread across India. Okay, and you can see some of the visions of IOCL. Okay, the ethics here, the customer, technology, people, innovation, environment. Right, you can just look at this. So care, innovation, patient, trust. Right, and looking at geographical presence. Okay, so you see that they are present in Sri Lanka, UAE, Sweden, Singapore, US, Netherlands, through its subsidiaries, right? And some of the major projects that they have done is that in financial year 2020, so the company spent around like 17,000 crores for upgrading their refineries to produce BS6 compliance fuel, right? And the company is also working on a major ethylene glycol project, as it is new refinery in Pradeep with an estimated cost of 5,700 crores. Okay, and some of the important subsidiaries that IOC have is that Chennai Petroleum, like we have discussed, with 52% stake, and IOCL in Singapore, that is with 100% stake, and Petronet LNG Limited with 12% stake. Okay, and if you look at the intellectual capacity here, okay, you see here that the highest number of patents filed in 2021 with 1,519 patents. Okay, that's like so huge, right? And you see 30% on research and development team members hold even PhD degrees, which is kind of cool. Human capital, you can see that it has 7,79,209 hours training provided, and then 116.18 crores spent on training and development. So, and it has even 8.7 female employees, which is not bad. Okay, so coming to the interesting point, okay, why we should invest in this IOC, okay, for getting a very good dividend. So we look at their history, financial statement, right? So market capitalization, it has I'll just point this mouse here. Market capitalization, it has 96 crores, right, which is huge. And if you look at the current price, it has trading at 68 rupees, okay, which is kind of cheap, right? It is under 100. It is below a dollar, right? And you can see the high and low of this year. Okay, highest in 2022, it went up to 94, and lowest it went to 65, right? And stock PE, that is price to earning, is 10, which is very good. Okay, remember that when stock PE is below 30, it is considered as good. Okay, the PE below 30 is considered good. Book value is 86, which is even more than the current price, which means that suppose, okay, assume that IOC, like what, they run away, okay, like they're not bankrupt, but like let's say that they escape, and that means you're entitled to get 86 rupees even if the company vanish, right, out of nowhere. So that is the book value. So we're talking about dividend. Our main focus is dividend here, right? So dividend is 12%, which is two times of bank FDs. Okay, though there's a risk in companies, okay, in share in stock market, yet they're giving 12%, which is very good. If you look at SBI is currently giving like around 4 to 6, right, max 6. So this is quite good. And return on capital employed 15%, which is not bad, right? And then return on equity is 20%, which is also very good. Okay, face value not very important. So sales growth, you see that it has been growing in 10%, right? I think that growing at 10% is not very bad if you look at industry wise, right? Profit after tax is 9,600 crores, which is also very good. Sales 7 lakh 75,000 crores, which is wow, it's just good. Promoter holding 51%, that is held by President of India. We'll get back to that. And industry PE is 12, which is okay. And earning per share is 6 rupees per share, which means let's say that you invest 68 rupees, okay? Then you have 68 rupees, earn 6 rupees per year, okay? 6.81 rupees per year. This is what it means by EPS. Okay, so let's look at share capital. Okay, you see that the share capital, where is my mouse? Okay, share capital has been increasing, right? So this is something not very good. Okay, this is a little minus point, but it is just okay. Okay, share capital. And if you look at reserve, okay, reserve, it is increasing, which is just okay, quite good. And operating profit, you can see that the profit has been increasing, which is a good thing. And if you look at cash flow, okay, the free money that they have around, like right now they have around like 19,000 crores, which is quite good as of 2022. And if you look at command sales growth, you see here it is just okay. Profit TDM is not very good, but in 3 years track record, 10 years, it is just okay. And we have said that this does not give a very good return on the share price, right? So stock price compound annual growth rate is very bad, very bad. So I'll make sure that you see even in the chart. Okay, we'll analyze that. And as we have spoken about return on equity, so promoters, President of India holds 51.50%, and it is fixed. Okay, it's just there, and you can see that foreign institutions are holding tight. Right, they have decreased a little bit as of September 2022, but it is quite good still. And if you look at domestics, they have reduced a little bit, but still good. Public have reduced a lot to 10% now, and government 19.6. So this is it for the financial part. And if you look at investment checklist, intrinsic value good, ROE FD versus FD, it is better than bank FD, like I have said before. Dividend, very good dividend. And if you look at entry point, quite good, okay, and no red flags. So this is something good about IOC. And let's look at the chart. Okay, so you see that, like I've said, it is not giving a very good return on the share price. Okay, assume that you have invested in the year 2019, okay, at this 100 price, then it would have been reduced drastically, right, to how many percentage, uh nearly 38% loss. But remember, but they give a very good return on your capital. Okay, suppose let's say that last according to last year data, if you invested 1 lakh, then you're getting 12,000 as a dividend, right, which is quite good. Okay, so this stock is not for like getting a very good return on your share price, but to get a very good return on your investment. Okay, like through like interest with like a bank FD. Okay, so if you talk about entries right now, yes, it is quite good. 68 is a very good level of entry. You may even go down to 50. Okay, but that's fine. Okay, it may fall up to like 50% of your capital, but that's fine. This is a government company, okay, government owned company, so nothing to worry as of now. I mean, like, things can change later, okay. But for my personal suggestion, I would say that it is not bad if you don't care about the price of the company, but if you care about getting returns, okay. So this is it for this company. You can see some of the managing directors and all right here. Whole-time directors, you can see the Srikan, Madhya, Vaidya. I don't even know them. Okay, you can see some of them listed here, some of the independent directors. So this is it for this video, guys. Thank you so much for watching, and see you guys in another video. Bye for now. Finding it hard.